Hi everyone, today's session is all about stablecoins in Asia. I'm joined by Sam, Mark, and Cian. So instead of me running through their bios, I'll let them introduce themselves, who they are, which project they work with, and how they first got involved in this project.
Yeah, hello everybody, thanks for having us. I'm Sam MacPherson, I'm co-founder CEO of Spark, and we're doing commercial lending within the Sky ecosystem, specifically focused on crypto lending in Ethereum.
Hey, Mark Phillips, co-founder of Grove Labs and Steakhouse Financial. We're building credit and liquidity infrastructure on top of the Sky protocol. My background is in consulting. I was at Deloitte doing consulting for about 3.5 years, working with global alt asset managers before coming into crypto. First got into crypto by discovering MakerDAO in about late 2020, and always thought, being an early Bitcoin adopter, that stablecoins would be needed to actually facilitate a real on-chain peer-to-peer economy. And Maker at the time was really the only way as an individual investor that you could get exposure to that thesis. Obviously, if we could all go back in time, I think we'd love to, invest in Tether or Circle. But back then, unfortunately, it was not a possibility. And I'm sure some people in the audience have heard, Tether's now raising $20 billion at a $500 billion valuation, which is pretty crazy. Just to see how fast the industry's come and grown in the past few years. But yeah, super excited to be here. Thanks for having us.
My name's Cian Breathnach. I'm a contributor to Sky, leading the team that's building out the infrastructure, integrations, and partnerships across the Solana ecosystem. So we've been sort of quietly working for the last couple of months in building the groundworks, the foundations for the next star to be announced within the Sky ecosystem, which will focus on DeFi and RWA allocations into Solana. My background is in traditional finance, specifically actuarial science. Found my way into DeFi a couple of years back and have just sort of been completely obsessed with programmable finance and excited and privileged to be part of shaping this next iteration of composable finance.
Right. Thanks for sharing your backgrounds. So here's my first question. Stablecoins have become the biggest use case in DeFi, right? So why have they become the backbone of crypto? So starting with you, Sam.
Yeah, I mean, there wouldn't really be DeFi without stablecoins. The product market fit is pretty clear. This is access to the US dollar, so emerging markets, settlement exchange, this kind of stuff. This is what's generating the demand for cross-border payments, generating the demand for stablecoins. But yeah, the usage within DeFi, it's necessary. I mean, you need to have a currency that you're lending and trading against. So the US dollar is the reserve currency. It's just a very natural fit.
Yeah, I mean, if you think back to like about a decade earlier, when you saw the early and first kind of iterations of DeFi protocols, one in particular that I remember was called Augur, which was like one of the first, if not the first, on-chain prediction market. And I always thought, having a somewhat professional gambling background, that having peer-to-peer, counteracting parties, make bets on things without intermediary mediating and taking a massive fee off the top would be a great use for trustless technology. And now that project obviously did not succeed, but now you see, and part of the reason is because you were betting in Ethereum, and no one wanted to place a bet like 3 to 6 months in the future based on Ethereum when you had no idea when the price of Ethereum would be. But now you see, Polymarket, Kalshi taking off, and they're all using stablecoins. And that just shows how critical and how far the technology's come over the past 10 years. I think it's taken a lot longer than I think we would have thought, 10 years ago. But now we're at the point where I think things are going to really start to accelerate, and we're approaching, I think, an inflection point. Especially as I hear more and more about these rumors where in the US, the SEC is thinking about creating this regulatory sandbox environment to enable these on-chain products to actually make their way into regulated channels. And the more that we knock down these walls between DeFi and traditional finance, the more that this growth in the on-chain economy is going to accelerate.
Yeah, I mean, I guess when you look back at the kind of the genesis of stablecoins, I guess payment stablecoins are almost the unintended gift from DeFi. I guess the original stablecoins sort of evolved as a unit of account to really book speculative P&L on chain without the need to exit the network. And so a natural evolution from there, I guess, of unit account is into unit of credit creation or the ability to create debt. So I think really as long as we've got a desire for unit of account in speculation or a desire for credit creation on chain, stablecoins are always going to remain a major backbone of the ecosystem.
I agree with all of the points because especially in Asia, the demand for stablecoins is USD stablecoins is insane, right? They use it for trading, saving, remittances. But as programmable money, I don't think the use cases are there yet. So I want to ask you if you agree with this point, and if you do, what do you think explains this gap?
I mean, it's actually quite interesting, the Korean market, because it's pretty unique in that a lot of the exchanges are use the Korean won as opposed to the US dollar. So I always found that quite interesting. So I think there's actually a lot of potential for a Korean won stablecoin as like the next one after the US dollar, oddly enough. Yeah, so as a unit of a programmable account, I think there's lots of use cases for this. Like all we do is work in smart contracts, basically. So we're moving around money all the time with code. So yeah, I think it's already here and it's quite big, the use case.
Yeah, I'd say one of the biggest and most important early primitives is kind of like DeFi 1.0, as I would consider it. Vitalik just made a blog post this past week where he talked about DeFi being like one of the core building blocks of an on-chain economy. And what these DeFi protocols like Spark, Grove, Aave, Morpho, etc., even Athena to an extent, is they allow you to put your stablecoins to work and earn a yield. And you've seen an evolution from protocols that have monolithic designs like Aave to more modular and composable designs like Morpho and Camino on Solana. And I think that's kind of the future, is more and more composable protocols to build on top of each other to enable you to do more things with your stablecoins. And that's one of the things we're focused on at Grove. We're building basically a structured finance protocol where you can segment risk and return more easily. And it's just another new type of primitive, sort of like Pendle has been to split the principal and yield between various assets that are put into the Pendle protocol. And we're doing this for credit. So the more and more of these kind of like core building blocks that are built, I think the bigger and more kind of interesting things you're going to see in DeFi. Like in traditional credit, it's so hard to trade like private credit. You're usually like calling another desk, say, hey, like I have this asset, I want to sell at this price. Do you know anyone that's interested in this asset? Whereas on chain, having it just be on a public blockchain, there's just all this public liquidity. You can instantly see, okay, who's the buyer, who's the seller, what's the bid, what's the ask, and kind of move these assets around much more seamlessly and quickly and without friction. So.
Yeah, I mean, I think it's been terrific to see in recent months the extent of adoption and sort of like narrow banking use cases of stablecoins. It seems particularly in this region that's been driven by sort of very forward-looking, very progressive regulation. But there's still probably quite a lot of element of consumer protection playing in there in terms of giving folks more access to compose within DeFi, plug into DeFi venues, and leave sort of the walled garden of super apps or bank-like apps. I suppose the cynical view on that is that the powers that be, invested interest, want to preserve control over some of those elements, and access to DeFi sort of gives the user more control. But I think if we're being very honest, in DeFi right now, we still have a lot of UX problems. It's still pretty unforgiving when issues happen. There's no one to call to resolve. So I think there's a lot of design space and open potential for folks building a DeFi to try and bridge that gap and make it more ready for prime time for mass audience.
Interesting. Then what do you think will be the killer use case for Asia going forward? And what kind of strategies are you using for this market? This time, can we start with Cian?
Yeah, I mean, I think there's a lot of the very obvious killer use cases in payments, remittance, and plugging into these major super apps. So I think, in particular areas that we're interested in is mostly in credit creation and debt. I think for Asia in particular, things like cross-border trade financing is pretty interesting. and what stables can enable for sort of lower cost microfinancing and things like gig economy payments, financing, things like that. They'd probably be areas I think are pretty interesting to observe.
Yeah, I'd say, in my opinion, it's making like access to financial products and yield more open and transparent and seamless. Like it's sort of what Hyperliquid has done for like trading with perps. It's like everyone loves trading with leverage. Everyone loves doing things with leverage. And right now in all of these yield products, like on Pendle or with basis products, to get leverage, it's often complicated or an expensive user experience. And that's one of the things we're trying to do with Grove protocol is make it a lot easier to get leverage on yield products to provide that access to opportunity. Because when I was younger and didn't have enough money, it was so hard to get into like private credit products like hedge funds, private equity products. Those products are just like catered for a much like more elevated net worth individual. But if we can build products that are on par or better than what's offered privately to everyone with any amount of money, I think that's a huge step up in evolution of the technology. So for me, it's providing these yield products to individuals. No matter how much money you have, even if you only have $1, you should be able to get into these products.
Yeah, echoing a lot of what was said, and so like me as a foreigner coming into Korea, very, very hard to interact with a lot of the financial applications here. Like a lot of my credit cards don't work. It's like very difficult to do payments. There's a lot of friction there, and really what crypto is about opening up finance to everybody and just making it all very seamless, so we don't even have to be thinking about it anymore. And so this is the really interesting thing here, just more connectivity between Korea and other markets all around the world.
Thank you. So we've covered the bigger picture. Now I want to go a little bit deeper and ask each one of you some individual follow-ups. Starting from Cian, from your perspective in the Sky ecosystem, how do you plan to stay ahead of like fast-moving projects like Katina or like just institutions who are trying to enter a stablecoin market?
I guess from consulting and service provision, you've got that adage of you can pick two of three between quality, speed, and cost. I think in the stablecoin game, there's sort of a trilemma, or at least kind of three pillars to think about. One is durability, robustness. The second is in sort of yield and the ability to outperform, and the third is in capacity or capacity to scale. So I think on the first of those, I think Sky is pretty much unrivaled when it comes to security, robustness. It's been around for many, many cycles and will be around for many, many more. I think on the second front, there definitely were some questions about the ability to seek out and be dynamic and more aggressively find better opportunities. But I think the Star agent framework that's rolling out now with Spark, with Grove, and with others to come is allowing for more dynamism, allowing for teams to be more nimble and seeking out those opportunities. And then I think on the last point about capacity, certainly with many of these new challenger stablecoins, it's very clear that capacity becomes a problem at a certain scale. And I think that the model that Sky has pursued over time through the Star Agent framework really has much, much more scope to grow to scale and to accommodate the scale that we very much all anticipate is to come with institutions.
Thank you. Mark, Grove has already amassed $200 million in capital on Avalanche, right? And with a $1 billion, if I remember, allocation. So that's real money. So what I'm curious is, what are institutions telling you behind closed doors, and how does that differ from the public narrative?
Yeah, I'd say institutions are much more interested in participating directly on chain than everyone would suspect. I think historically, especially in the US under the prior regulatory regime, everyone was afraid to participate on chain directly. So there's all these KYC, AML, and closed walled garden type of protocols that mostly failed. But now people are wanting to participate in the permissionless on-chain economy on public blockchains, And that's like a huge step forward. The regulators are willing to work with and kind of allow this activity in the US. And hopefully that's the same in Korea and broader Asia as well. Because once institutions come on chain, I think, again, like everything's going to accelerate pretty meaningfully. And like right now, we really haven't seen like a ton of institutional money come on chain, but there's so much, latent demand for like these products that we're building on chain. And I think being able to interact and build into these various like DeFi primitives that, once it happens, like, everything I think is just going to moon. If you're in, not shitcoins at least. So I'm particularly very excited for institutions to actually like have institutional products built on top of crypto rails. Probably a lot of them will be in partnership with DeFi native teams and protocols, because a lot of the TradFi institutions just don't have the domain expertise to build themselves in DeFi. And a lot of people that are building, aren't culturally aligned with a lot of traditional finance. Like a lot of us came into crypto because we wanted to disrupt and kind of change how things were in the traditional financial system. So I think it's hard if you're a TradFi institution to kind of hire a really, really top-notch, in the trenches crypto builder. And a lot of those people tend to gravitate towards, people that are, on the stage here today. So that's going to be interesting to see kind of what the evolution of them participating on chain is. A lot of them are kind of building regulated products like BlackRock, Securitize, Apollo, et cetera. But in the future, I think a lot of them are going to look for teams that are in the trenches like us to build products on chain. And so you're going to see, I think, products just like open up to these big TradFi channels and really take off. So it's definitely a very exciting time to be in this industry.
Thank you. That was very interesting. Sam, Spark has grown really fast as Sky's lending arm, right? But most of this growth actually comes from Sky's choices, such as the SSR or RWA yields from USDS. So how do you make Spark more than just an extension of Sky? And what's Spark's unique edge?
Yeah, I mean, we're pursuing a number of business lines. So the main one is the internal lending market called SparkLend, which is the second largest money market on Ethereum. Currently at 7.5 billion in total deposits. And really we're orienting this around like blue chip lending. And as Mark said, institutions are coming on chain. I think this is going to be the next major growth vector. And we're positioning Spark and SparkLend in particular as the high scale blue chip way to generate yield. So yeah, specifically a focus on a small set of assets that like borrowers particularly want to use, and just eliminating tail risk as much as possible. Another business line that we launched the version 1 of this called Spark Savings, which is like an interface to get into the SSR, as you say, the savings rate. But we will be launching version 2 of this actually in the coming weeks, which is less directly attached to the SSR. These are cross-chain yield vaults that are attached to the major stablecoins such as USDC and USDT, and they will provide the savings rate, but with full liquidity to the underlying asset. And this is fundamentally cross-chain as well. So we can use our back-end infrastructure. This is the other product called the Spark Liquidity Layer, which allocates capital across DeFi, CeFi, and TradFi opportunities, rebalancing automatically based on the yields on various opportunities. This is our back-end engine, and at peak it was deployed about $4 billion as of a few weeks ago, generating an average of upwards of 6.5% on this balance sheet. So it's a highly optimized yield generation engine, and now users are able to directly tap into this through the Savings V2. We have a number of other business lines that we're pursuing as well. We're actually going to be putting out a roadmap very soon, so you'll be able to read this and see what's next.
All right, great. We'll end the panel session here. So thanks for sharing your insights and thanks for listening. Thank you.